Analysts at UBA expect market rates to inch higher following the OMO auction settlement. Meanwhile, the Debt Management Office offered a total of 221 billion naira across the three tenor buckets at the T-bills primary market auction. Chuka Nwachukwu, the head of Assets and Liabilities Management at UBA, joins me for this discussion. Chuka, let's get your take on what we've seen play out in the market so far. And let's start with the primary market auction, which was the key for today.
Yeah, thank you, Ken. Today we saw 250 billion, well over 250 billion on offer as regards the NTB auction. The last auction, the rate dropped slightly from 20.7 to 20.69. We expect the rate to be within that range of 20.65, between 20.65 to 20.7. Yesterday there was a OMO auction. The OMO auction, obviously some inflows came into the market, and of course keeping with the mandate of not leaving the system too liquid, CBN obviously offered OMO. Well over 200 billion was on offer. About 513 billion was the subscription, but less than that was sold. So we saw just 1 basis point drop from the rate. We saw a drop from 22.34 to 20.33. And so today market has been quiet, but we've seen the rate hover within that 21, 22 levels.
But let me get your assessment, because we're seeing the second half of the year coming to a slight close now. In terms of how the market has performed so far in this quarter, what stood out mostly for you, and how do you see things segueing into the next quarter?
I think what has stand out is the fact that for the very first time, as long as I can remember, we see the CBN giving you further guidance, just like what is obtainable in most advanced country. You see that the CBN obviously has given direction on what they intend to do in terms of rate hike, and of course has to do with keeping with their mandate of keeping price stable. And so the market has actually reacted to to the movement of MPR, well over 700 basis points, within the course of these MPC meetings. And so that stands out for me. Secondly, the issue of liquidity. The liquidity has also played a major role in terms of trading. We've seen system, liquidity as tight as sometimes about 1.5 trillion. So that obviously has affected activities in the fixed income market, especially because liquidity obviously play a major role. So if liquidity is tight, then traders will be forced to to sell some of the securities, maybe even at a loss, in order to create liquidity. So those two factors actually stand out, and stand out for me. And generally, I can say that this half year has also been good so far in terms of policy direction. You can tell where the government is going. Yeah.
Yeah, but now looking at how we're going into the wrapping up this quarter and into next quarter, is looking more likely that we're going to be in a higher interest rate environment for the rest of the year, and even almost for the foreseeable future. How do you think about rates for both T-bills and bonds, and at these levels? And you think there's going to be, I'd like to get what your prediction will be looking like the end of the year.
So I think that what we see is government has DMO, and CBN has practically, met part of the deficit demand. You could see that within January to this year, they've issued well over 7 trillion, which issued and sold well over 7 trillion of security, and that obviously is in line with their own mandate, keeping rates elevated in order to attract foreign investors, and that has played out into the FX market. We've seen that the Naira has appreciated over time, from almost 2,000 to around last week. We saw CBN intervene around 1,150 levels and 1,200 levels. So that for me has actually kind of like met their demand. Now going into the second quarter, I see rate decrease, especially on the bond market. Then the bull market, we also see the same thing.
Is that in response to inflation, because you see inflation coming down, and then more or less that we're going to see
absolutely, yeah, okay. Absolutely. On two things. One, on the inflation, because some of the monetary policy guideline that had been put in place is gradually yielding results. But secondly, I mean, you see that government will begin to reduce its appetite for borrowing. And so when that is done, you see that you won't be seeing this higher yield, because quite frankly, it's quite expensive. Paying back, at this level. So
not sustainable.
Exactly. So towards the end of the third quarter, and then towards the end of the year, we see decrease in yield. And so if any investor is buying now, is the best time to buy.
All right, thank you so much for that analysis. Chuka Nwachukwu is the head of Assets and Liabilities Management at UBA.